Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 26, 2017. I wanted to do an update to the medical device sector. This is a sector I've covered quite a bit in recent months, pointing out, highlighting mostly some standout bearish trade setups. Now, there's of course two ways to trade a sector. You can trade a sector via an ETF. In this case, IHI is the iShares Dow Jones U.S. Medical Device Index Fund ETF, or you can trade the individual components. So, in the case of IHI or the medical device sector, as I've stated recently, I can make a much better case on shorting individual stocks and outperform the sector by a good margin because there's a pretty wide array of charts in here, individual stocks, and they all have different business models. They're not, for example, when you trade GDX and you have a basket of gold mining stocks, well, they're all their bottom lines are tied to the price of gold. Sure, they have some different variables within there, but you'll see those stocks trade very, very close together. Whereas in IHI, there is some disparity between the fundamentals, the business models, the products they're selling. So, again, this is a sector I do prefer the individual ideas, and that's why I'm going over this. And then, most importantly, when I do these videos and I highlight my favorite standout trading ops, there are too many. When I look into a sector like this one, for example, and I see a plethora of trading ideas, trading ops that all look attractive, I can't possibly add them as official trades. So they're unofficial trades, and there's a couple of medical device stocks I think we have as official trades now or have recently. But I wanted to stay that. So number one, I hope you find value in these videos. And as far as the unofficial trade ideas, just to mention a few recently, those do, often extremely well. This one here's CPG. This was posted on the front page just I don't know a week or two ago, a couple weeks ago maybe, about here after the breakout. From there, it's already risen. It's hit the top of my first target zone, already up about 10% from where it was posted. And if you bought it, you could have bought it on a pullback, a back test to that trend line. That's always an objective entry. And from there, the stocks rallied about 13 or 14%. And that's just one of many. Here's another one. This is also posted on the front page in a video. I think we were right about here. Yeah, we were at 30 cents after this divergent low. Pointed this out as a great looking chart. And here's a stock that's already um, gained from that point. It's nearly doubled. It's up about 100%. When you had a couple opportunities to get there, so far it's fallen shy of my second target, but just beautiful chart action. You see that my first target was 40, took it out, came in, back tested, allowed you to re-enter there if you missed it or if you wanted to add to the position, and has since been moving up again. So we've had two tags there for about a triple digit gain. And again, that's just one of many. These are some of many unofficial trade ideas. So unofficial, official. If I didn't like the setup, I wouldn't share it. Um, just the unofficial trade ideas are easier to just throw out there because I don't have to do all the follow-up posts and calculate targets and stops and all that. I let you guys do that on your own. Although I'll always share the price targets on the unofficial trade ideas. They're just unadjusted, meaning you might want to sell a little bit below there. All right, that's that. Back to IHI. I'm going to run through these charts quickly. Again, I think the sector itself is poised for a correction. We did have a short on it earlier this year, and the stops were clipped. You can see right there, 165.81. That must have been my stop. And we came down to this first support level bounce, but we've since put in another divergent high. So you can see here we had a ascending price channel. This was a price channel, a breakdown, and just a normal run-of-the-mill kickback rally after a channel break or a break of a pattern. You often get an initial kickback rally. Sometimes that takes you back above the point of the breakdown. Sometimes it doesn't, as in the case of this one. You can never know which one it's going to be until after the fact. But I can tell you that it still has divergence. That additional most recent high was another divergent high in an extension of the previous divergences. So I have a pretty good degree of confidence this sector will continue to move lower or move lower from here in the coming weeks to months. Okay, we're going to dive into the individual components. I have some flagged. I'm not going to go over every component, just the ones that I have flagged, which is, so you have an idea of the video. If you want to go ahead on the settings and you click on the settings icon and you can increase the playback speed up to 2 times. I find anywhere 1 1/4 to 1 1/2 is pretty good. accelerates the video. And if there's a stock you're interested, you see a setup you like, just you can always click back to normal playback speed, pause, rewind the video, whatever you want. So we're going to go over 30 stocks, and as such, I'm going to talk fast. MDT, this one was first mentioned back here a few months ago. It has a very nice looking setup. It's already fallen another almost 8% from where it was mentioned. You can see these trend line breaks, corrections. This may have been an official target, and if I 62 hit, I guess it was an official trade back then. Came back up full circle, made a double top high. You can see this high was right about exactly where this other high was. So and that brings out another point here. Obviously, this one still looks bearish. You can see how well the technicals have played out. Fell, kicked back, hit resistance, which was former support, moved down, took out that 70, 79-ish support level, and it's probably going to come down here now to, I'll give you this number. Not the most objective entry here. Let me just say that now. If you're already long this one, that's why I'm covering it, because I've covered it in the past. Sorry, I meant to say already short. But when you look at the weekly chart on these stocks, this is the bigger picture here. This shows you a bull market. We've been in since March of 2009. The U.S. markets have been in what's long since been the second longest bull market in history of the U.S. financial markets. And so we know that's getting long in the tooth. That's just a simple statistical fact. You can argue it any way you want. But there's a double top high. There's your, this stock floundered around, but then you can see this was the bulk of the uptrend right here, and it was in a very well-defined price channel. That channel broke down, had a sharp correction, back tested, back tested, and finally started rolling over. Also put in a double top. So if you look up double top pattern online, most of what you'll see is for as far as to try to gauge how far that stock, you find the base, the bottom of that double top. Now I'm going to exclude this because that looked like a little flash crash there, and I remember there was in the medical device sectors in some stocks. So this box that I have here, this shaded box, really defines the bottom of the double top pattern. And the way a double top works is if you take the distance of the pattern from top to bottom, which I'm doing here with this trend line, and then you add that to the bottom of the pattern. So should that stock eventually go on to break down below the $70 area, this gives you your measured price target all the way down here to about 56, 57. And I'm just trying to paint a what if scenario. So just keep this in the back of your mind. If the markets start to roll over soon in the next 6 months, over the next year, whenever it is, or forget about the markets. If this stock continues to move down and then breaks that level, that gives you an idea of just how much potential there is priced into the charts. Another almost 30% drop in that one if that plays out. And right now, I'm not looking for that. I'm looking near term, and near term the outlook is bearish. And I'm also going through these in order of, as you can see here, I've sorted them by market cap. So keep that in mind as I go down the list. The first ones that I'm covering are the biggest medical device companies. They probably have the largest impact on the sector ETF as well. Um, Oops, I just undid one. 1 second. ABT. I accidentally unstarred ABT. Okay, I fixed that. I had clicked the flag and removed ABT from my list. I put it back in there. So there it is. There's the market cap. Let's just fly through these quickly. And as always, if there's a particular trade that you're in or interested in taking, um, if you're a gold member of the site, just drop me a line in the trading room, and I'll be more than glad to share, some additional notes or an updated chart on that trade. So here's ABT. What stands out to me, really, I don't see a well-defined trend line or a solid shorting op, but I do see this divergent high. You see a negative divergence at this point, an extension of those divergences. You can see them down here on the PPO and RSI. So this is one that ultimately, if the sector really has a pretty good correction in the coming months, I could see it work its way down all the way to about that $46 area. And that'd be a pretty decent drop. TMO, um, also not one of my favorites, but I'll point out here, you have a pretty well-defined trend line. And this wedge pattern, almost a price channel, you could actually probably draw a price channel this way. I had it like this before. That may be a wedge overthrow, but let's just give it the benefit of the doubt. And here's a price channel to watch. Now, you can always short at the top of the channel try to cover at the bottom or wait for a break of the bottom? And if so, these are potential targets. And again, this is a long-term target here, pretty solid support level, and I think it's a pretty good chance this target will be hit if the sector really takes some pain in the coming months. So just one to watch. Plenty of meat on the bone. If it does get down there, that'd be about a 15% drop. Striker, I believe this one's an official trade idea. Nice looking pattern. You had a rising wedge back here, breakdown, and that was good for a drop of just ballpark it about 13%. Same thing here. We have a rising wedge pattern, also confirmed with negative divergence, which I like to see at the high. Gap down, and then we had a reaction, a kickback rally, and I think that's where we shorted this one up here somewhere. And you can see it's since broken down. That looks like a little flag pattern as well, continuation pattern. Either way, we've broken down below it. Once we take out this support level, assuming we do, that's at 137.56. Call it 137.50 to be safe. That opens the door for a move down to any or all of my targets here. BDX, Becton Dixon and Company, price channel. Don't see divergence, but there is some horizontal support right here. It's dancing on around 192.66. Again, not one of my favorites. So let me move on. BSX, Boston Scientific. You can see the negative divergence forming here, just like you had negative divergence back here in 2016 with this bearish rising wedge. That was good for a nice correction there. Looks like we hit both targets on that trade. Um, and that was a big gap to be backfilled. That was a very logically placed target. Bounce from there, and you can see again an extension, consecutive divergent highs, and first target would obviously be the first support line, which is the uptrend line, but we also have horizontal support there. Let me move on to that one. Those are all potential targets, and I think if you wanted an idea of where this one's probably going, down here at about 2440, we'll call it. I think that's the ultimate longer term target. ISRG, I really like this one. May add this one as an official trade. Looks like it was an official trade back here. And again, guys, this is just a simple wash, rinse, repeat. This is what I do in trading. I look for these patterns. As you probably know, rising wedges and falling wedges are some of my favorites. They're easy to identify. They play out much more often than not. So there was a rising wedge back here. We broke down, had a little bear flag pattern, broke down from there. You can see how well it played out. We went right down to that measured target. I must have added that back at the time. That was a measured target for the bear flag. Hit that, had a reaction, finally came on down and hit my second target there. That would have probably been the final target. Otherwise, when I say potential, it means I never added it. It's just where it may have gone, but these were the two price targets. And then, boom, this one's come full circle. Began a new rally. And same story. We have a rising wedge with a divergent high. That divergence is now confirmed with this bearish crossover. Um, all we need now is for a sell signal is a break of this uptrend line, and that would bring us down at least to this level. This is my minimum target right here, 922. And to give you an idea, if that happens, that's a good for about a 9% drop. If things get ugly, there's a big gap back here that would probably test the top of. That's about a 21% drop. So a lot of meat on the bone for these trades. BAX, Baxter International, same story. Like everything. 2016 looks just like the charts today look a lot like they did back then. You see these rising wedges, divergent highs, breakdown. Might not look like much, but that was a 13, 14% drop. Here you have a rising wedge. We already broke down. We had a kickback rally. That kickback rally put in yet another divergent high. That's what I'm showing you here, just simply an extension of the existing divergences. The PPO has made a bearish crossover, so that divergence is confirmed. And as of today, we've broken down. You can see we've broken down below this minor uptrend line. So that one's headed down. I have to zoom in some targets again if you're interested. And I may even add some more of these as official trade ideas. But I think this is a very realistic target, about 56.80. If things get ugly, 53.62. And if things get really ugly, all the way down to about the $49.50 level. So we'll see how the charts play out. EW, Edward Life Sciences, looks like a double top. I boxed in these two. We nearly hit those previous reaction highs. Here's a trend line to watch. And if that breaks, it looks like there's a big gap here. I should have added there we go. This would be a target if these intersecting support levels go, intersecting, meaning this uptrend line, as well as the horizontal line. So that's that level. You want to wait for that level. Let me give you that number if you want to set a price alert. About 108.35, call it. And if that line goes, that will have also taken out the trend line. And then there's a big gap to fill. So even if only that gap is filled, let's just say that support gives way, you're talking at least a 7 to 8% drop. And that's not bad for a swing trade. It'll probably happen quick too, because gaps are usually backfilled rather quickly once they're entered. ZBH, Zimmer Biomet Holdings. There's your trend line. This was covered before. It's already played out very well. After that trend line broke, we had a waterfall sell-off. I don't know where it was first covered. I believe back inside the wedge. Maybe, I can't recall. That's about a 14, 15% drop set up here in this this is really a flagpole. If you take this line here, that's the flagpole to move down into this bear flag pattern. You add the flagpole to the top of the flag pattern, and that gives your measured target. So far, we have broken down. We've had a kickback rally. So this one, although I like to see very impulsive selling out of a bear flag, and you might want to hold off to see us turn back down and come and take out the bottom of these recent lows. If that happens, this would be your measured target. And from where we're at today, oops, I'm not trying to grab that line, you're talking another 14.5% or so potential in that one. There's also a gap right here to fill, so expect it. If it does play out this way, I think we'll get something like this. We back test, we fail here on the back test, we come down, hit the top of this gap right here. You can see the gap, and or the bottom of the gap, I should say. Have a little reaction, kickback, rally, and then continue on down to that ultimate target there. WAT, Waters Group, nice, pretty well-defined uptrend line, not drawn out here, but I'll show you the divergence. There it is. What I like to see to confirm the bearish nature of this pattern here. There's your divergent high. Looks like we back tested right about there. Let's see. I'm making a mess of these trend lines here. Forgive me. Okay, there it is. Breakdown. Back tested for a while, finally rolled down, and we rolled down impulsively after that final back test. And we put in that divergent high. So at bare minimum, I think this one's coming back in to once again test that 171.22-ish level. That's about another 4% drop. And if and when that level goes, which there's a pretty decent chance I think it will, we'll probably come on down here to about 160.40, 160.50, somewhere in there. IDXX, just clean looking chart. You can see the negative divergence that I've shown down here. We had the negative divergent high, negative divergence. I had a minor uptrend. Let's see, a minor channel, a little price channel there. We broke down, back tested, but this is our primary uptrend line. And what I love to see is once that trend line went, that big red impulsive candle, that helps to confirm or validate that trend line, that a lot of eyes were watching that as a important technical level. So we saw the sell-off, little kickback rally since. It's starting to roll over again. It still hasn't even hit my first target, so I think that's very likely, and that's 140. That gives you about 9.5% drop. And if that 140 level gets taken out, we have a very thin zone. See this big green candle? That's the only trade that occurred in the last at least couple years. That's comparable to a gap, really. When you have a one-day quick move up, you can look at the volume price histogram. There's really no bars there. So what that means is when 140 goes, I expect a pretty swift backfill of that thin zone, and that would be, just from the 140 level, if you shorted there, that's about a 13% drop. If you're short here and you ride it all the way down there, you're talking about a 21% drop. But again, I would expect at least a reaction when we get here. So this is how I expect this one to play out, something like that. RMD, bearish rising wedge. Here's your divergent high. At least you have this uptrend line to watch. This one may want to work its way a little higher. But if the sector really starts rolling over, you're probably not going to get another thrust up in the wedge. Anything's possible. Either way, this is your first support level. Break of that would trigger a short entry. There's your first target down here, 72.60. The next target down there, 66.57. TFX, there's an ascending broadening wedge pattern. If you take this white trend line and this one up here, that's what you have. We're at the top of that ascending broadening wedge pattern. That's also a potential divergent high. We just need to see the PPO cross down, make a bearish crossover. It'll confirm that divergence, and these are all targets. Not one of my favorites, but just pointing it out. HOLX, Hologic, must have already covered this one up here. I can't remember where I first covered it. Either way, not enough meat on the bone left. This one's already hit what would have been my final target had I shorted this one. So let's just leave that, move on. STE, Steris, I believe. Yeah, Steris. Here's a steep rising wedge. Prices have broken down, but they haven't really started moving impulsively lower yet. If and when they do, first target's right there, the top of that gap around 84.56, then the bottom somewhere around 83.40, maybe all the way down to this is the actual bottom of the gap. You can see where that candle was the last close before we popped up. So that's really a target zone, if you will. And if and when that goes, then there's a possibility going all the way down here to about 77.36. ABMD, this one looks like a nice uptrend line. We had a little whipsaw signal. That's what I circled there. However, there's a lot of reactions on that trend line. We snapped back up. So I still think that trend line's valid, even though it had that little whipsaw fake breakdown there. Negative divergence on the most recent high, and we're not far from the trend line now. So a break of this trend line would be your sell signal, and that would take us about 11% lower to my first target here. It's about 140.12, give or take. Next one down is 135.25. Let's just leave it at that for now. That's pretty decent move if we get it. BIO, Biorad Labs, there's a very long, well-defined uptrend line. You can see the divergence right at the high. It's negative divergence down here. Breakdown, we hit the first target that I had there. It's about 211.90, that support level. Had our little snapback rally and look to be moving lower now. So this may not even act as support again because it's already been tested several times. So it wouldn't surprise me to see that level go. Maybe a fleeting reaction there. And this would be the next target down here, 194.68. HRC, Hillrom Holdings, very clean. You can see the negative divergence below this rising wedge pattern. Impulsive breakdown, everything you like to see, gapped right beyond that first support level to hit the second support level almost perfectly. We've bounced since, had a kickback rally to backfill the gap. That would have been an objective short entry had you been watching this one there at the gap. And again, I believe I covered this in past videos. So now this is the magic number, about 71.96. So just below the 72 level, that's support. And if that support level goes, then this is our next target all the way down here around 63. So let's see, let's just say we waited till the support level went, and that's about almost a 13% drop there. All right, a few more. We're almost finished here. MASI, Massimo Corp. There's a nice trend line. There's your divergent high. Very impulsive selling off that divergent high. Came back in and walked up this trend line, finally broke down. And again, this is technical analysis works great on these stocks. That's what I like about trading the medical device sectors. For some reason, there's some stocks that in sectors where, especially the broad market, because then you have so many different things in there. But this one tends to behave very well. You can see the breakdown, the red impulsive candle. It's not mere coincidence. I probably had this trend line there before that even broke down. Came in, and then you can see that reaction low, which was a natural support level, and look how many times we've bounced on it so far. So what you're waiting for on this one is a break below that support level, and that's roughly 82.33. If you want to be safe, you can wait till that last reaction low. We took it out just ever so slightly before, so call it 80.90. And if that goes, you have a thin zone all the way down here to about 60.70, about the 60.70 level. And that's about a 25% drop. So there's a lot of potential there. And again, when you look at the weekly charts, if you're not a believer in the 20% drop because we're in a bull market thing, just look at these charts. Look at these weekly charts. Look how overbought this is. The stock has probably never been this overbought in its history. You don't see this often. This is a weekly chart, and you're looking at an RSI reading above 90, 92 actually, above 92. So this is a stock with a lot of hot air. I don't know if they've finally come out with a cure for cancer or some miracle drug or whatever they're doing. Oh, that's medical device. I'm sorry. I was thinking I was in the biotech for a second there. Um, Look, anything's possible. You can do your due diligence and do the fundamental analysis on this one, but I think it's reasonable to say, with as much as it's gone, even a bottom run-of-the-mill Fibonacci retracement on that last move up. Let's just show you what the potential is. Let's just say we grab some fibs right here from this reaction low. I won't even do the entire bull run. I'll just take this point here, and that would give you, a minimum pullback. 38.2% Fibonacci retracement takes you down here to about 77 or so. And if you want to play the game from the lows here, or really from the entire bull market run right there, that's when it bottomed right here back in 2011. This would be a 32% retracement of the bull market. And that's just a low end Fibonacci retracement. You can see the 50 and 60% retracements here. So don't underestimate the potential on a lot of the stocks right now, semiconductors, everything else. Once that sector finally breaks and you get a bear market, there's some huge gain potential. Just keep that in mind in trading, that, sometimes if you see one that has a lot of potential, just trail stops down and let your profits run. PODD, Pod, Insulet Corp. There it is, bearish rising wedge, negative divergence, pretty well defined price target there, about 48.90, and some resistance or support between there, but it could work its way all the way down here to 39.34. Again, depends how things trade going forward. PEN, uh, Penumbra, I guess. I'm not really familiar with that company, but there it is. There's your divergent series of divergent highs, one, two, three consecutive divergent highs, really an extension of one large divergence, and a very well-defined trend line. This chart spans 2 years. You can see the trend line starts all the way back in 2015. Numerous reactions to validate that trend line, so I would give it a high probability um, rate of success if and when this trend line breaks. I'd have to zero in on some price targets for you, but I think it's reasonable to say at least down here at about 67, 63. GMed, there was a rising wedge. It's very steep breakdown back test. That back test put in yet another divergent high, an extension of the existing divergences, and it's already started to play out. So that's the common theme here too, guys. A lot of these have already played out for the moves. Had I shorted this one on the back test, you can see this line. That would have been my last target. I would have covered there, would have covered again there. If I didn't get out for whatever reason, I'd cover here. But this is a pretty bearish looking chart now. I think, again, most of the meat has been taken on this trade already. Not a lot of meat left on the bone, but if you look at the PPO, you guys know I like to use that as a trend indicator. When it's below the zero line, the trend is bearish. So all along here throughout this rally, it was above the zero line. Now we crossed below, we've come back up, and what I often see is when we back test the zero line from below or above for that matter, it acts as support or resistance. So in this case, resistance, and that's going to keep the trend bearish. And again, you look at these charts, this stock just a few years back was trading at $10 a share, and it's run all the way up to 33. So, it's up over 300%. So to think that it's going to come down another 20, 30, I don't think is unreasonable at all. Nuva, NUVA, Nuvasive. That one looked like a nice, clean, bearish rising wedge. We gapped down below the wedge, denying a really objective entry. Some of these you want to get in front of sometimes. I'll do that at times. I didn't own this one or short it, but that's the story on it. It gapped down below, but that gap still, in hindsight, proved to be an objective entry because it came back in, tested the top of the gap, or the bottom, I should say, right there. You can see on that kickback rally, and it's since been falling. It's been falling in this price channel. I wouldn't touch it with a 10-foot pole. In fact, I can see some positive divergences. If anything, I'd be looking to go long this one. So there's another reason. If you trade IHI, short IHI, you're shorting this stock along with the most bearish stocks. And this one, I think the near-term outlook is more bullish than bearish at this point, of course. INGN, nice, clean, long, well-defined uptrend line, divergence at the high, which forms this wedge pattern. And here's your minimum target right here, 90.87 from where we're at today. Let me just try to get next to that. I'm not trying to grab that line. I'm trying to go right here. Go down, that's about 10.4%. Not a bad swing trade. And it's near the apex of the wedge. This is one that I'd be comfortable shorting within the wedge because if it's going to break down, it's going to do it soon. Um, you might want to wait for a higher probability sell signal, maybe wait for this recent reaction low to get taken out. But that one looks good for at least a 10% drop, maybe down to any of these other targets. And three more to go. A few more, actually, four or five more. OSUR, OSure, OSure Technologies. Nice price channel. Look at that clean, well-defined ascending price channel. Negative divergences on that price channel. And that's the warning that a trend change is likely, and this channel is likely to break down. And if and when it does, I could see a drop all the way down here to 1570 without much of a problem, and that's a pretty decent drop. That's about 30%. So we'll see what happens there. BEAT, BEAT, biotelemetry. There it was. Had a nice rising wedge, well-defined trend line, and broke down and very impulsive selling. Again, this is technical analysis working very well in a lot of these stocks. This is the first and only kickback rally. So even if you're only looking at an ABC correction for you Elliott waivers, there's your A down, here's your B up, kickback rally. ABCs are corrective phases. Then we'll probably come down here. And there's my price target, 27.27. I think that has a good chance of being hit. So let's get rid of those, move on to the next one, and wrap this up. CSII, cardiovascular systems. There it is, broke down from this price channel, had divergences. May want to work all the way down to the $21 area in time. CRY, CryoLife, negative, almost negative divergence. This one made slightly higher highs on the RSI and the PPO. Either way, I think it needs to come back in here and test this breakout here. It had double top high, broke out, and that's bullish on face value. But again, I think this one has to come back in at the very least and test that 2015 area, I should say, and that would look something like this. So you could maybe game a pullback trade. Again, not one of my favorites, just had it flagged, so I figured I'd cover it. And then here's one that doesn't look bad. ARAY, and that one had a divergent low recently, and I probably would have covered that if it was flagged before, and highlighted that as one of the few stocks that actually had a more bullish than bearish outlook. And since that divergent low, I don't know where I covered it exactly, but it's up about 30%. So not one that I would short. Not sure if I'd chase it long here. Well, I can tell you I wouldn't. It's already moved up 30%. Maybe would have been a good long there after that reverse, that potential bottoming stick, big washout, flush out move, and then looked like it closed back up. So that train has left the station. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.